All-time highs in the markets. That's right, traders. We are at all-time highs. Whether you're talking about the S&P, you see the rally that's in the DAX, you see just rallies in the NASDAQ100. The markets are ripping, and we just bombed earlier this week Iran. We actually bombed them. The United States did. So if you're sitting there going, wow, how are markets still going higher and how are we hitting all-time highs? You know, I was just having this conversation in the ForexAnalytix chat room. So if you are in the chat room, you've probably seen this. It says, is this panic buying on stocks to do with the major spending bill? And I'm like, yeah, no nuclear war, shadow Fed, that we're going to have probably incoming in the next couple of weeks, maybe even the next month. There's no war, spending bill, poor positioning, markets now chasing yields. There's all sorts of reasons why this market is going higher. And it's probably going to continue to go higher, at least in the very near term. I mean, if you think about what just happened this week, and I'm going to take you over to the S&P really quick. You look at the markets this week, and we had this breakout. You can see that we talked about the breakout. If we broke above the highs, this is clearly breaking out. The market didn't pull back. We dropped bombs on Iran after I filmed the week ahead video last week, and the market barely pulled back. It was like 1.25%, and then ripped higher. Look, there's been a lot of people sitting on the sidelines. They've been sitting on the sidelines for quite some time. If you listen to analysts on YouTube, especially the economists, they tell you a recession's imminent. The housing market's turning over. We're in crisis mode. The jobs market is about ready to crumble. Think about the hesitation. If you're an asset manager and you're like, wow, after Liberation Day, market sold off 20%. I've been kind of reluctant to get back in because this tariff situation is going to be really bad. And here we are, fast forward a couple months later, and now you have asset managers that are actually chasing the market at highs because they have to be involved. If they're benchmark against the S&P, and the S&P is up on the year so many percent, and they're not, you have to chase this market higher. Is it the right thing to do? Does the risk reward make sense? Probably not, but doesn't mean it's not happening. And that's the thing that we have to respect as traders, is we have to respect the price action. I'm not sure if I said, thanks for listening in, but my name is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video. So thank you all for being here. But yeah, that's been like the big story this week is, wow, here we are pressing to all-time highs. This next week, we're going to talk about the week ahead, obviously, and what to expect, and some of the currencies that I'm looking at trading, some of the markets I'm looking to trade. I'll be talking about crude. I'll be talking about the S&P. Nick from Trading Analytix, he's going to be jumping in as well. We have a lot that we're going to be covering, so I'm going to get right into it. But I want to say thank you all for being here. Thank you for supporting ForexAnalytix and what we do here. And if you like these videos, you think they're beneficial for you in getting prepared for the next week, make sure you give me a thumbs up, give the team a thumbs up, jump down in the comments because I might miss something this next week. We have some pretty important events because it's a shortened week. It is the 4th of July holiday in the US. That means the United States will be closed. Most banks and brokers will be closed on Friday. A lot of U.S. markets. Doesn't mean that the FX market will be closed and other markets will be closed, but the liquidity is going to be a little bit poor. So it's kind of a shortened week for trading, but we're cramming a lot in just a few days. So let's talk about all of that and more. So again, if you like these videos, make sure you give myself a thumbs up. Subscribe to the channel so you don't miss any of these videos that we do each and every week for the last 8 years. All right. So you want to talk about kind of the things that are happening this next week. You can follow along here on a calendar, on ForexAnalytix. You can just adjust the dates over here, or you follow along with your own calendar. But I'm going to talk about them. I'm going to talk about some of the corresponding currencies that will reflect the economic data. On Tuesday, we have Eurozone CPI. Now, I do want to talk about the euro extensively because the euro has finally broken that 1.1650, really key level that we've talked about that goes all the way back to 2005. I had to, if you guys remember, it's at 116.50. I don't know why it moved up a little bit there, but 116.50 has been a huge pivot going all the way back to 2025. Let me see if I can pull up a chart for you guys that can actually give you that. Yeah, you can see this will go all the way back to 2005 right here, this low right here. You can probably actually go all the way back to 2004, but 2005, big pivot in the market. And you can see, this has been huge. It's been a huge pivot, going all the way back, right? So now that we've broken that, actually, it's a little bit lower than that. There we go, 116.50. And so once we broke that level, it's been just straight up for the last couple of days. Pullbacks have been very small. It's been very minor. And next week we face a lot of data, like the Eurozone CPI, which is on Tuesday, and actually Monday will be German CPI as well. So some things to be taken into account. Just looking at this weekly chart of the euro, and this is the week ahead charts. These are the charts that I do only with you guys, and I make these drawing tools, or I make these drawings and I leave them for you the previous week. If you follow along via ForexAnalytix and you're like, well, I'm reading the analysis on the euro and your chart looks a little bit different here, that's just because I use a different subset of charts for the analysis, and so does the rest of our team. These are the charts that I leave specifically for you. But we talked last week about this Gartley pattern, or maybe we talked about it on this chart, or I posted it on Twitter. Regardless, this Gartley pattern takes us to about 120. Anywhere between 119 and 120, we're going to start to find some sellers, whether it's the 161% extension of that move there, or it's the longer term trend line, or the 88% retracement of this entire move. You have a lot of resistance up there, and it's a big number. 120 is like a big psychological number that is basically got its target like kind of spray painted on the euro's back. So that's what everybody's going to be going for, which I'm assuming once we get there, there is going to be a lot of two-way price action. So just be cautious when you're approaching that level. On Tuesday also, there's an ECB conference that Christine Lagarde, Powell, Ueda, UK MPC Bailey, Bank of England's Bailey from the MPC will be attending, and they're going to have a panel discussion, so that might be a little lively on Tuesday. Also on Tuesday we have ISM manufacturing data and JOLTS data. So this is going to be our jobs week, and that's just on Tuesday, because on Wednesday we have ADP, and on Thursday we have non-farm payrolls and ISM services and unemployment claims. So that's all going to be fit in just in a few days. Like normally we scatter that across the week, but actually it's going to be Tuesday, Wednesday, Thursday, jobs data galore. So I want to take you over to the dollar index, because the dollar index is going to be very important, what's happening. Now, the dollar index is one of those charts that we look at here on the week ahead video, but we also look at, it's the same chart that I use pretty much universally because it's a universal chart. It's just the dollar index. The dollar index is approaching a very long-term trend line. We've talked about if we break down towards that trend line that comes in at 96, that there's a good chance that we're going to find buyers down there. That would be the equivalent, in my opinion, of the euro near 119 or so. So should we get to this, and let's take this, you see that long-term trend line. Should we get towards 96, it's going to be vitally important to see what happens in the market. And if you look at the daily chart, I mean, obviously the dollar is it just is being sold. The 161% extension comes in of the most recent bounce, comes in right here at 96.50, and below that's that major trend line. Now, when you approach a major trend line like this, you can get above or below it maybe by 50 pips on a long-term basis and still be quote unquote respecting the trend line. So you have to be careful, because as you can see in the daily charts, and I'm just kind of highlight what you see down here, this is a divergent relative strength. So even if the dollar index drops a little bit further, relative strength probably will not match that previous relative strength. I've told our traders literally for months, if we break down towards 96 in the dollar index, I'm probably going to reverse and go long. Now, is that the ultimate low of the dollar index? And do I think it's going, right back to 110? The answer to that question is probably not. I think the long-term reasons to be short dollars is still very significant. So therefore, I think that any type of rally will be short-lived. But when you have trends that are in place, you get a sell-off, and these trends are so strong, you might get a bounce, but I think eventually the dollar index will break down at some point. But I think that it's a place where you're going to see a reaction. That's when you start seeing like that two-way price action in the market, which is good because right now it has been pretty much nonstop dollar selling for the last several months. But we are starting to get a little extended. Sentiment is starting to become extreme. If you don't know a good place to find sentiment indicators, you can go right over here to the news and research room in the ForexAnalytix chat room. Pull up like the DSI and see what's being registered there. We're not quite at extremes yet, but I believe we will be if the dollar index continues to drop much further. So, I did want to talk about the dollar because we have the jobs report. I mean, the jobs report, how important is that going to be to the market? Like I said earlier, most economists, they have been anticipating that the jobs market is going to start to show some signs of weakness. Is that truly going to be the case? Is this going to be the month that happens? We're going to find out. And I think it's going to be really important. And that's going to set the pace for like a 3-day weekend. So if that jobs report is weak, the dollar could really theoretically sell off and continue to sell off. We could actually penetrate this long-term trend line. The flip side is if the jobs market continues to stay relatively strong, we could see a bounce from these key levels come next week. Now, there is one other thing that I wanted to talk about really quick, and I want to talk about it because we have Switzerland on Thursday releasing their CPI. Now, that's the early Thursday morning, but what you probably noticed about the Euro Swiss, and I've been playing the Euro Swiss on the long side all week. Every time it sells off, I trade it as I try to buy it as a bounce. I ended up buying it above 94 cents, taking a loss, but every time it's been dipping down into the mid 93 cent, I've been buying it and spinning out of it. And the thing about the Swiss franc, and you look at the dollar Swiss, and this is going to be the chart I really wanted to show you. This is actually a really important chart here. So we have a bear flag pattern. Obviously, you guys can see that. I'm not, you're not, blind to the chart pattern. Now that chart pattern, obviously it points to a lot lower level in the dollar Swiss. That would mean that the euro dollar is really going to be trucking up towards 125 or something in order for that to happen. And I don't think that's a realistic expectation as of yet. I want to show you, I'm going to zoom in a little bit on this dollar Swiss, and I want to show you a chart that I think is important, or a development that I think is important. So if you take these lows across here, you're at what we would call channel support. Okay, you can see that's channel support. Now, the low that we created today is also vitally important because, let me move this up. I should have made that just a little bit longer. It's okay, we'll do it ourselves. Okay, so you can see we have a channel, but also what you're going to notice here, if you take this high, that low to this high, we're at the golden Fibonacci extension, which is 79.50. Now, if you have been, if you utilize ForexAnalytix, and this is where I do analysis one-on-one with me and our ForexAnalytix community every single day. We talk about the importance of all of these key levels in these instruments. So we go through one by one. We talk about the trends, where important levels are, and you can see where there's an asterisk that denotes that it is a key level of resistance or support. In the dollar Swiss right here, you can see the key level support 79.55. That is 161% extension. And I also knew it was it not only was 161% extension, but it was also channel support. So as a result, we've been highlighting the importance of this level. We came within just a couple of pips and then we've bounced. So now what's important about the Swiss inflation data is if inflation, which you see is falling, not only in the US, but kind of globally, if you see that inflation data tick lower, plus the Swiss National Bank lowered the rates to zero, guys, not negative rates, but zero. They've cut the rates to zero. And if inflation is low, you might actually see the dollar Swiss and the euro Swiss actually recover from here. So I wouldn't want to be shorting down at these levels. But as you can see, we are in a bearish trend. You have to just be a little careful with the Swiss CPI, and you have 127% extension right there as well. this is going to be all very, very critical support as we go into this next week for the dollar Swiss. Now, I am going to talk about a few other markets. I think it's important this week to discuss other markets, but before I do that, I want to talk about a few things. So if you haven't been to our website yet, and you see right here it says click here to learn more, something big is coming. This is the launch and the release of Trading Analytix. So if you want to stay up to date on everything that's happening with Trading Analytix, put in your name and email address. Now, some of you will put in multiple names and email addresses because we are giving away this month, in the month of June, so you got a couple more days to do this, we are giving away a trader funding program assessment. This is how you can get funded as a trader. We're giving one away this month. Next month, we're doing more giveaways. And in August, we're even going to do more giveaways. So if you're registered for our mailing list, it's an email list. You're going to get a couple pieces of mail. One of them will be our weekly email that will give you this week ahead video, kind of give you a briefing on what's coming up this next week. But being on that mailing list, you'll also get updates about what's happening with Trading Analytix. And there's going to be more perks than that. So more perks being you might have first access before everybody else to Trading Analytix when it comes out later this fall. So make sure you sign up, put your name and email address. Like I said, if you wanted to enter a couple of times to try to get that trader funding program assessment that we're giving away, and if you're already on our mailing list, you can do it again. You can put it, you just to make sure you're on there. But if you're on there, you're automatically entered to win. All right. So I wanted to talk a little bit about that. And like I said, what I also wanted to do is I wanted to talk about other markets. But before I do that, I'm going to bring in Nick from Trading Analytix. He's going to talk to you a little bit about the S&P and about some key stocks, but I'm also going to give you my S&P analysis in just a few short minutes. So take it away, Nick.
Hello everybody, my name is Nick Groves with Trading Analytix. Blake, thank you as always for passing on over to me. Let's go ahead and dive right into the charts. So again, all-time highs, right? What a crazy environment. And I have to point out, now that we're in all-time highs, just please note that this is a different trading environment. If you have not been in an all-time high market before, just know that pullbacks can be shallow. And I'm going to be bringing some data with us today to kind of outline how far maybe we could go. The issue with all-time highs is that you have to start looking at extensions at times. You know, you kind of start to run out of certain resistance levels. And it appears, as far as the S&P goes, that we could be heading up to 6350 at some point, this next extension. You can also take, an even larger extension from the highs to lows here, and maybe take a look at this 6500 level. This all sounds crazy, right? But there is potential for it. I know seasonally, I wanted to bring some stats to you all. Let's take a look at the July since 2009 to 2025. You notice that July is actually a pretty good month, and we're just about to kick it off right around the corner from it. 94% of the time, we do tend to close positive in the triple Qs in the month of July. I also wanted to point out, too, that there's this 2-week median. We were supposed to have some weakness in the second half of June. We did not see that. Maybe it can come, maybe it's lagging a little bit, but do note that the first half of July is often quite a solid 2 weeks. So keep that in mind as you're trading. Let's also go ahead and dive into, in the event we start to pull back, up top, you're looking next whole number is 6,200. Then you go up to 6250, and we've talked about some of the extensions here. I would be interested to see if we get back below 6150 and maybe create somewhat of a false breakout. That could make things a little bit more interesting. So a break below 6150 might bring us a pullback. I do imagine that dips are bought, but where could those dips be bought? Well, I'd be looking for the 38.2 right around 60.25. Obviously 6K is going to be pretty key support. One of the reasons why I feel as if we could continue to have some inflows is take a look at this report from Bank of America. Institutional clients' net buying of tech last week ranked first in their data history since 2008. So what's going on? Well, investors, let's say that they sold out at some point during this larger pullback. They have not had much of an opportunity to get back involved. I guess this dip at 57.50 or so could have offered that, but there's a lot of people playing catch up at the moment, which to me signals the risk of a continued squeeze. So it feels as if dips could be shallow and we could continue on higher. At least that's how I'm feeling. Taking a look at the NASDAQ really quick, you'll notice that it also cleared above some resistance. A break back below 22,400 might tell us something, but for the moment, this is certainly broken out. And you'll notice in the tech stocks, Nvidia. Look at Nvidia. It's at all-time highs. Okay, I do have some resistance in Nvidia up at 171. You have this longer-term channel here. Well, somewhat of a channel. I took the lows from here, cloned it. The 127% extension and channel resistance comes up at 171. That's no joke of a move. I mean, you're talking about another 9%, which I do think we could see in the equity market. Another 5 to 10% higher. I think that's possible. Take a look at Microsoft as well. Microsoft has been on such a blast after being relatively sideways for pretty much all of 2024. This one has really picked up in quite a relentless way as it nears the 127% extension at 500. One of the more interesting stocks is Apple for me. Apple is just stagnant. And, this Nvidia and Apple go back and forth on the heaviest weighted stock. It just continues to consolidate, and it's getting tighter and tighter. I guess you could say there was a false breakdown here, so maybe we're going to have a breakout in Apple higher. But things are definitely heating up, and you have to wonder about the tariff situation, right? I might leave you guys with this here. Inflation today versus the 1970s. I know I'm talking about some bullishness, but there's a potential that we have a breakout at the moment that gets reversed. One reason why that would reverse would be due to inflation. You see Fed Powell and Trump going kind of back and forth on interest rates. Powell appears as held out because of the fear of reinflation. You'll notice we're tracking quite well to the 70s and early 80s. And if this does ramp back up, you might end up in some form of a stagflationary environment like we had back in the 70s. So if that occurs, we start getting some false breakouts. This could create a really interesting trading environment. And we just saw PCE tick up today. Will it feed into July and snuff this fire out? We will be telling you and updating you with Trading Analytics. If you come to our landing page, please click on this link here and get a part of this something big that's coming soon. I know that Blake's also offering some TFP incentives, so please give us your full name and email, and we will plug you in. If you're looking for more of this content, please follow Trading Analytics. Thank you all so much, and have a great weekend. Cheers.
Thanks, Nick, for covering those markets. We're filming at the same time, so I don't know exactly what he covered, but I always watch this video after the fact, and I watch his analysis because he delivers great analysis for the team and for us, for our community. So make sure you thank Nick down below in the comments. Tell him how much you appreciate him joining in. All right, like I said, I wanted to cover some other markets really quick, and one of the things I wanted to cover, and I want to talk about the S&P. If you go over to ForexAnalytix and you click where it says Elliott Wave, you're going to get Gregor Horvat's analysis and how he's looking at the markets. Now, this is what he's looking at here is he's looking at a possible wave 5 in the S&P on a breakout higher. He measures somewhere around 6,500 to 6,700. I myself, and let me go ahead and get this up for you. I've talked about it a couple of times this week on a few different venues. So let's go out to the daily chart. And let's just do a simple Elliott wave count and show you what he's looking at. So, and I'm going to delete this really quick. Delete that. We don't need that. I'm going to delete some of these things just to clean up the charts just a bit. So just bear with me. Okay. So a simple Elliott wave count. What you're going to see here is this. This is the 2022 lows, high, low, high. There's your wave 3, the elongated wave 3. Saw for wave 4, wave 5, should be somewhere up here around 6,500. Now, why is 6,500 a level that I think is going to be, relatively important for the market to be looking at? Because of the extensions that come there. So if you go from the previous highs, and I'm gonna have to adjust that here in a second. Let's zoom in, make sure I got these numbers correct. So here's your high to there, and your low to right about there. You're gonna see the wave 5 would take us to the 127% extension around 65.95. So somewhere around 65.50 to 65.95. We are breaking out to all-time highs. Now, unless the situation in Iran and Israel and the U.S. accelerates or reignites, and we start to see that the ceasefire cease to exist. Get it? Get the pun? You guys get that pun? If that was bad, I'm gonna send myself right into the naughty corner for that one. If things still are elevated over the weekend, of course, the stock market's probably going to pull back right at the open over the weekend. But realistically, if the ceasefire continues to take place, and we know that this shadow Fed, whether it's Waller or Besson or whoever gets the nod to be the next FOMC chair, they're going to put a lot of pressure on Powell. We know rate cuts are coming, and the market's going to really like that, amongst so many other reasons why the S&P can go up here. But I believe once you get to 6,500, those are levels that you really have to be cautious about being on the long side. All right, so I'm going to talk a little bit more about that in our segments ahead, as we talk about the trade setups of last week, which we will come back to the S&P, or I'll also talk about the trade setups going into next week. So with that being said, I do want to cover just a couple of other things. I do want to talk about the gold market. The gold market does look a little vulnerable. We talked about gold and its breakdown of this rising trend line, and if that happens, we might be developing more of a, flag pattern, descending channel, something like this. We talked about this last week. I warned you guys that gold was looking relatively weak. So if you guys were listening last week, hopefully, it saved you a few dollars, especially for those of you that are long gold. You can go back and listen to last week's episode if you'd like, but we talked about this. Those charts, I don't really even want to change them all that much. However, what I would like to do from here is I'd actually like to see how far we could actually pull back. So if you take that low to high and you draw a simple Fibonacci, you'll see we're at a 618 retracement. So this really tells you that if you get below 32, whoops, that's not what I wanted to write, below 60 or 3250, that could open up some downside back towards 3100. So, I try to think about, when you're looking at charts like this, I try to think about, how do you feel, or how does somebody feel who's long, who bought, let's say, gold in the 3400 range and they paid up for it? At what point do they start to say, I don't want to be long gold anymore? My assumption is going to be somewhere below 3,100. We start getting below 3,100, then we're on our way to 3,000. We get below 3,000, then that's a completely different story. So right at this point in time, you got to be very careful with gold, because gold looks vulnerable, as it did last week. All right, so I wanted to make sure that I talked about that. I am going to talk about crude oil, because crude oil will be one of the setups for this next week. So make sure you stick around for the trade setups that I'm going to give you this next week. Crude is one of them, so I just kind of gave it away. All right, so let's go to the other thing that I wanted to cover. I wanted to cover Bitcoin. Now, Bitcoin, we talked about this being a long-term distribution pattern. I haven't talked much about Bitcoin in recent weeks, because I drew this for you a few weeks ago. Do I still think it's in a long-term distribution pattern? Because this is like what we call a Wyckoff distribution. Maybe, but it's actually looking quite a bit more bullish, because, hell, stocks are breaking out. So if stocks are breaking out, why can't Bitcoin break out as well? So if you look at it from that point of view, you have to start looking at Bitcoin as more of a bull flag pattern, right? And right now, it just is. So the fact of the matter is, if you start getting much above like 110,000, there's a good chance that we're going to resume this trend. And I have to say this, and let's admit the obvious right now. If you're looking at Bitcoin and you're a trend following trader. You notice this low that was, down at 75,000 basically to the highs and to the all-time highs. The pullback hasn't even been a 38% retracement. So as a result of that, it is a very shallow retracement, which means that there's a higher probability of a continuation. So if we have a continuation of this move, Bitcoin could literally be trading at 120, 130,000 in the weeks and months ahead. Especially think about that if if the stock market continues to break out to the upside, that could actually happen. So keep that in mind. Those are the instruments I really wanted to cover before I start reviewing the trade setups from last week. But one thing that we are seeing right now, one thing that we're seeing is elevated volatility. Volatility, I mean, you could say, well, Blake, we're at 16. We're at the lowest levels of volatility we've seen since earlier this year. This is true, but it's a different plane. When you have volatility around, in the 12, 10 level, that's a lower plane. And you see where volatility is somewhat elevated. Yes, we are still coming down. Yes, it could continue to come down. But because we're still elevated, there's a lot of trading opportunities. And what's the best way to take advantage of these trading opportunities? Well, in my opinion, it's through the trader funding program. So there's two things that you can do. You can actually get access to capital immediately. And you can just go right from our website to the trader funding program. You can get access to funds immediately, or you can go the more economical route by doing a one-step simple assessment. Now, I'm going to let you guys learn more about the trader funding program in this 2-minute video. So sit back, enjoy, and I'll catch you right after the video. Are you looking to get funded as a trader? Why would you want to get funded? Well, the markets are extremely volatile. There's a lot of great opportunities, but because of the volatility, you don't want to risk your own money. You'd rather risk somebody else's money. That's why traders get funded. At Trader Funding Program, we have 2 different options that you can choose from. One, instant funding. That means immediately you can access up to $100,000 in capital. Now, by doing that, you have risk parameters you have to follow. You can't lose more than 8% on a trailing basis. That means as you're making money, you can't lose more than 8%. You also can't lose more than 5% intraday because we want to make sure you can control your risk. That is your instant funding program option for you. But let's say you wanted to take a more economical approach. You can access up to $1 million with the one-step assessment. Now, the one-step assessment, that means that you can't risk more than 6% of your high water mark to pass your assessment. That means as you're trading a demo account, as you make money, you can't lose more than 6% with an unlimited amount of time. Once again, you can't lose more than 5% intraday because we want to make sure you can control your own risk. Now, with either option, you have the ability to keep up to 90% of the capital that you make, 90% of your returns. That's pretty awesome. You know what else is great? With either one of those options, you get included in the ForexAnalytix community for a certain period of time. The ForexAnalytix system does analysis on 30 different instruments, everything from currencies to gold to indices, and it gives you different trade ideas, analysis, live squawk feed, so you're up to date on news, you have risk management tools, everything that you would need as a trader in your toolbox to help you become successful. But more than that is you're included in the ForexAnalytix community, the private chat rooms where you have access to me and other analysts from ForexAnalytix. Imagine being able to see what I'm trading, to be able to talk to me and other analysts and other traders and see what they're doing and ask questions. Why trade alone when you don't have to? You should utilize a company like Trader Funding Program for your funding needs. So check out Trader Funding Program for more information. I'll see you soon. All right, well, this is what you guys have all been waiting for. I'm going to give you the top 3 trade setups of next week, but I'm also at this stage, I'm going to review the 3 setups from last week. So let's go into them. The first setup from last week. Well, it was about the S&P. And I was like, if the S&P breaks down again below, and I gave you the number, 59.20. If we break below 59.20, you got to be on the short side. Well, we got to 59.20 and it didn't break. We didn't get a sustained break below there. So unfortunately, that trade setup didn't happen. That happens. You know, you prepare for a trade and you have your right setup. It just doesn't happen. It just doesn't, come to fruition, and you don't take a trade. Yeah. So that's a scratch. All right. So trade setup number one, we didn't get below that 59.20 on a sustained basis. No trade. That's all right, because the next trade was long the euro dollar at 114.20, and then or a stop and reverse at below 114. Well, this week we went as low as 114. Let's see, here's the low. The low was 114.53. So we didn't quite get to 20, but I'm going to tell you guys, and if you want to follow, you can follow along what I'm doing in the trades room, and you can see when I'm, picking up long the euro dollar, getting in, getting out, turning around, going in other directions. You want to know all that information of when I'm, buying the euro and selling all of my euro. You can do it right here in the trades room. And in the trades room, I talked about, being long the euro, and it was really my home run trade of the week. So did we get to 14.20? No. We got just a few pips of it before taking off. Did you take advantage of it? I hope you did. If you were in the ForexAnalytix community, you probably did Tuesday to Wednesday and so on. So you can count that one 4, or you can say, well, Blake, we just didn't get to 114.20. All right, fine. We can scratch that. We can scratch that one. All right, so what's the third trade setup from last week? Do you remember? Long silver at the 38% retracement, just above 35 bucks. Well, if you look at silver this week, and on Tuesday, we dipped to the 38% retracement. It went to 35.22 was the 38% retracement. We were looking for a bounce from there. We went as low as 35.28. I mean, that's 6 cents. 6 cents? Yeah, 6 cents. So I didn't trade silver, but if you did, you made money. All right. So I would give that one to me. I mean, 6 cents is, that's pretty damn close. I think most of you could say that's pretty good. All right, so the first one was a scratch. The second one, yeah, I was long the euro. If you guys weren't long the euro, again, you could be in the chat room and you would have known I was long the euro. All right, so I would count that one, but again, it's you guys are taking score at home. And then the third trade setup, we came really close. And guys, these setups are trade ideas. Risk manage the way that you're going to risk manage. But it's, for me, I'm finding levels that have the greatest amount of risk or greatest amount of reward with the least amount of risk. Because there's always risk when you're trading, but you have to be able to manage your risk. Hopefully you've been doing the same, all right, this last week. So, you can count 1 or 2, however many you think. But I think last week, so some pretty good setups. So this week, you're probably asking, what are the 3 setups for this week? Well, this week is going to be super exciting as far as I'm concerned. So, am I still long the euro? Yes, I am. Do I still think it's going higher? Yes, I do. How high do you think it's going? Well, I think we're going to 119.50 to 120. So, I am looking to be on the short side of the euro dollar, somewhere between 119.50 to 120. Why would I do that? Because you can manage your risk really well. Look, if it gets much above 120, you get stopped out. But if we get a little bit of reversal back to 116.50, well, you're risking from here, you risk $1 to make $4. That, my friends, is a good risk reward ratio. So first trade setup, looking to short the euro 119.50 to about 120 with stops somewhere above there. All right, I think that is going to be a great setup as we run right into the triangle resistance. Do I have a good argument to be buying dollars right now? I don't. I do not. That's why I don't think that any counter trend trade is going to be super, it's going to play out like longer term. I don't think it's going to be like the euro makes it to 120 and we're going back to 110. I'm just not in that camp. But I think it's going to provide a good risk reward to be on the short side. Trade setup number 2. Well, you've already heard me say it, so I'm going to say it again. I'm looking for the S&P to get to 6,500. So around 6,550 to 6,600, I'm looking for wave 5 to complete, and I think that's going to be a great setup for a potential short. What you're going to notice here is relative strength is divergent. Well, it's going to still break out. If we break out to the upside, the S&P is probably, the RSI, is probably going to break out. But if we fail up here, what's going to happen is the RSI probably will not reach those levels. And if that is the case, that is going to be a long-term divergent relative strength on a rally in the S&P. So trade setup number 2 is to be short the S&P above 6,500 for the wave 5. Trade setup number 3. Trade setup number 3, I want to turn your attention to crude oil. You know, the only thing that can derail crude from going down, in my opinion, is another flare-up in the Middle East. Well, what you notice with crude is crude has come down to the 618 retracement. So let me move this blue line to the 618 retracement is right there. It's at $64. So a daily close below 64 bucks should probably take us back into the 50s. Do I think crude's going straight to $30 a barrel from here? No, but crude output is, even today, there's a risk, and it was reported today that there's a risk of increased output from OPEC. It's going to keep some downside pressure on crude, and as long as the Strait of Hormuz stays open and there's no continued conflict in Iran and Israel and the U.S., then crude oil prices should continue to fall. As economic activity might slow down, or we'll just catch up, crude prices will catch up to where they were at. So a break and daily close below 64 bucks, I think, is going to be a great setup for next week. And guys, just remember, if you wanted to see crude oil analysis in several different ways, you can go right here to ForexAnalytix and you can say, well, what is the harmonic patterns showing us? What are the Elliott wave counts telling us about crude? And what's the basic technical analysis telling us about crude oil? Oh, there's a bear flag pattern. All this information is right on ForexAnalytix. It's only $1 for 10 days to join our community, to try out this platform. But make sure you download the mobile app when you do so. Guys and gals, I hope you enjoyed today's week ahead video. And if you did, make sure you give me a thumbs up, subscribe to the channel down below, and make sure you comment down below if there's something that you think is really important that I missed, or if you just want to say hello. I want to thank you all for spending your time with me. You guys are all wonderful. I hope you have a great remainder of your weekend. Remember, next weekend's going to be a short one. We're going to pack it all in within a few days. That's exciting. That's more volatility. So take advantage of it. My name is Blake Morrow. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.